There was this one specific trade in February of 2019, I remember. It was on Work, W-O-R-K, which is Slack. And I had no business trading it. As we just said, I'm a small cap trader, so why are you trading at Work? And that's typically how those big losses begin. Michael Hudson Huddy, he has this quote that says, in order to be a consistent winner, you have to first learn to be a consistent loser. And around that time, that really sunk in for me, where I was like, I just have to learn how to lose.
Hello and welcome to the Trader's Journey for Investors Underground. In this episode, I'll get to speak with a phenomenal trader named Matthew Monaco. Matthew found early success trading penny stocks and has since then expanded his playbook and become one of the great retail traders to emerge in recent years. In this episode, we'll discuss Matthew's trading journey, the strategies that he used to find early success, discuss the discipline that it takes to stay consistently profitable, and much more. Hello, Matthew. Thank you for being here and welcome to the show.
Yeah, thank you so much for having me on.
We got a chance to meet and do a panel at Traders for a Cause 2024. And so for those who don't know much about you yet, I'd love to just start by asking, how did you first get interested in the stock market and trading?
Yeah, it's funny because I actually have a similar story to kind of a lot of people where my introduction to the stock market would go back to high school. And in high school, you do that stock market simulation style game. So like as a senior in high school, I took an elective called Wall Street and we did that. And I was a pretty competitive guy. So naturally on the side, how do you make money in the stock market? Just so I could kind of win this hypothetical competition that we were doing. And ultimately that led me to trading. Originally led me, to Tim Sykes and those penny stocks, and my account, let's just say in the simulator back then, fluctuated a lot. I think like within the first week, it was up like 70% because I just got lucky doing stupid stuff. And everyone in class was like, what are you doing? How are you doing this? And I didn't know what I was doing. I was just getting lucky. I did win the competition, but like results weren't like out of this world. It's just, most people don't usually make money during that. So that was kind of my introduction to the stock market. And I knew I was always interested. I just, at that point I was pretty young. I didn't really have any money. So I went to college and was kind of always in the back of my mind going through college of, let's look at the stock market. Then 2017 kicked off. And 2017 was one of those crazy years. Specifically the Bitcoin cycle went absolutely nuts. And I was going to college for software engineering, so, nerds plus Bitcoin, like everyone was talking about it obviously all the time. I was like, okay, let's figure out, how to trade. So at that point, typical college jobs, I saved up like $2,000 or so to start trading. And I went out there and dabbled around and naturally lost money because I didn't really know what I was doing, but kept seeing all these other people make money. Again, specifically was like following the Sykes crowd and his millionaires. So at that time it was like Roland Wolf, who got started with a similar size account and grew it to about $1 million, and Stephen Dux and all those people. And I was like, yeah, like, okay, like it's possible. I just don't know what I'm doing. So I had to figure it out. And so I marked 2017 as like that official start of my journey. And it wasn't pretty for pretty much the first 2 years until about 2019. And I think ultimately what gave me a pretty good kick in the pants was the way my software degree worked. It was a 5-year program, but it was 4 years of school. You had to do a full year of like an internship before like you got your degree, and you could split it up throughout the years. But I did like a 9-month internship, end of 2018, beginning of 2019. And I hated my job. I was like, this sucks. And it was paid. So, I was saving up some money. But after the end of that 9 months, I had about a year of school left, probably more like 6 months of school left. And I was like, I got to figure this out because I don't want to be doing this job for the rest of my life. So in 2019, started taking it super seriously. I actually started a podcast, which is why I was so excited you hopped on, Beyond the PDT. And we only did like 20 episodes or something, but the point of it was I wanted to talk to other successful traders and get in their heads. We've got some really cool episodes, like when Jack Kellogg was like at like $100,000 of profits, and like Brian Lee, I think, was in there too pretty early on. So I gravitated towards those guys. I think part of it was obviously we're the same age and stuff, and I just tried to figure out ways to talk to them and see what they were doing. And put in that time. And I think just being around those other successful traders obviously sped up my learning curve very, very quickly, especially also at that point I was taking it seriously. And then we all remember 2020 and 2021, which opportunities were just going crazy. I mean, there was opportunities for everybody. The market was hot, and that allowed me to exponentially really grow my account. And yeah, that's my start to my journey.
Yeah, incredible. And I wanted to mention, I'm familiar with Beyond the PDT. I've listened to a few episodes, so I'm a fan. I believe it's you and Bryce Toohey.
Bryce Toohey.
Yeah, incredible. Who was also on that panel at Traders for a Cause. So it's a small world.
We were college roommates, which was funny. And then I always talked to Bryce about trading. Obviously, he was my roommate, but he, like most people, was kind of like, I don't really know. Seems like gambling. And then I had 1 month, I made like $5,000 or $6,000 or something. And he was like, oh, like, or maybe it was like $1,000 day one day. And he was like, oh, like, this is real. And then he started taking it seriously, and he's had a lot of success as well.
Incredible. And I definitely want to talk about some of those early wins. Before we do, though, I would love to talk about some of the early lessons, because you talked about the first couple years being less than spectacular. So what were some of the first lessons that you learned from the market? Do you remember some of the first trades that you took and how you felt even placing some of those live trades?
Yeah, honestly, it was super humbling. I didn't know what I didn't know. And, going through school, like, I was always fairly good at school, got good grades. When I put my effort towards something, I'd usually figure out how to make it work, how to win. And then the stock market came, and it doesn't really care what you think. It doesn't matter. It's just the stock market's going to do what it wants to do. So it was definitely pretty humbling in the beginning, learning that I didn't know I didn't know what a strategy was. I didn't know how to manage my risk, any of those things. And that definitely took a long time to, get through. If, like, you're not always going to be right. Like, losses are important. You have to learn how to manage your risk. And naturally that kind of led to my biggest mistake in those early years, which is, I could always usually get a good string of winners going, and then you'd have that one big loss that would wipe out a week or a month and set you back. And not only is it frustrating for your account, but obviously, like, your confidence and emotionally, it takes quite a big toll. So that was really the biggest hurdle that held me back in the beginning. Was I'd always let a couple of big losses, one or two maybe a month, that would kind of reset me back to zero or put me red on the month. And until I learned to, like, manage that risk correctly, I didn't make any money.
Yeah. I think that's a familiar story with a lot of traders, especially starting out. So I wanted to ask, what was it that eventually helped you reduce those one big losers that would wipe out all of your gains? Was it a particular change in risk management or placing rules that you didn't have prior? What was that big or small step that allowed you to get to that next level and control your risk a little bit better?
Yeah. Well, I think for me, it was really just like max pain. Like, after trading, at that point, it was going on 2 years. I still didn't really make any money. And like I said, I had the kick in the butt because, like, life was coming up. There was this one specific trade in February of 2019, I remember. It was on Work, WORK, which is Slack. And I had no business trading it. As we just said, I'm a small cap trader. So why are you trading at Work? And that's typically how those big losses begin. And I think my account at the time, I was slightly profitable, but I think I was still below PDT. Like, I was like $20,000 or so was my account. I was just trading at E-Trade, and I took like a $5,000 loss on, like, Work. And it was like a week before I went on, like, a spring break trip, and I was like, this just sucks. Like, and I think, then I took obviously that little time off as I went on that vacation. And it was that point for me where I was like, you have to figure out how to stop these losses. And, one of my favorite quotes, I've had the privilege, obviously, to learn from a lot of different millionaires like Michael Hudson and Kyle Williams and Jack Kellogg, who I would consider good friends. And Michael Hudson always calls, he has this quote that says, in order to be a consistent winner, you have to first learn to be a consistent loser. And around that time, that really sunk in for me, where I was like, I just have to learn how to lose. And so I put some more strict plans in place, double downed, made sure I just focus on the strategy too. Cause in my early years, and I think a lot of traders struggle with it too, is they try to do everything. Or maybe their strategy, there's no play today. So then they try a different strategy. And then all of a sudden you lose money. And well, it's like, yeah, you didn't really know what you were doing. And I definitely fell for that. So focusing at the time, because I really needed to be in account growth mode because my account was still so small, was like, this is my strategy. That's all I'm doing. And at the time it was pretty much OTC breakouts. And I was like, I need to grow my account. Like once we hit, maybe $100,000 or more, then maybe we can start to change our plans. But like you haven't earned the right to do other things because your account still at the time is so small.
Yeah. Thank you. And I think that's something for listeners and the audience to consider if they're having those sorts of, similar occurrences is, are you trading the same thing every day? Are you trading your strategy that you're working on? And are you taking the consistent losses, which is almost counterintuitive, but great advice, to be able to consistently lose and to lose gracefully and to know that, just doubling down on your account, your position size, hoping that you're going to get back maybe to break even or something like that on the day, that could lead to those really big outsized losers. And so just losing small, losing gracefully can get you back on track. So.
Yeah, no, definitely. And it's easy to sit here and say, like, I know it's easy to sit here and say, cut your losses. But we're all just humans at the end of the day. And even still, like if I have a bad month, I had September wasn't bad, but I had one big loss in September. Basically the same mistake. I ended green a little bit, but like kind of killed the month. And then I went back to the drawing board and I was like, what are you doing? Like you got a little loosey-goosey here with your rules. And sure enough, you paid the price. And every now and then I think it's healthy to have a reality check like that. To get you back in line. And at that point, it's like, how do you respond? Do you keep making the same mistake and, blow up? Because, yeah, it's easy to put a good string of trades together and then you get loosey-goosey, throw out the discipline. There you go. You're going to get punched down pretty fast.
And so what was that bit of success like for you? In other words, at what point did you realize, hey, maybe I might be able to do this stock trading thing maybe for a living or possibly for a career? Do you remember that moment? Was it a defining moment or trade? Or was it something that just you built up over time?
I think it was a combination of things that all kind of came together early 2020. And obviously the market was hot, which definitely helped the situation. But I was talking to Kim Ann Curtin. She's a good friend too. And around that time, and that was my last semester of college, and COVID just happened. We went online. So the markets went crazy. Everyone started trading like crazy. And I had a pending job offer to be a software engineer. And it was about 6 figures. And I was like, it's hard to say no to this, but right now there's COVID and I didn't have to start my job till like September. So there was like a 3 or 4 month gap. So I was like, I'm going to try to go out there and, this is your moment to figure it out. And I was above PDT by that point. 2019 was my first profitable year. I made maybe, $20,000 during that year, but that got me above PDT. That got me above a lot of the restrictions. And then, I was having a pretty good 2020, but specifically it was May 2020 when all that COVID stuff really, really went crazy. And, I doubled my account that month. And then the next month I doubled it again. And I was like, oh, this is crazy. Like that, in this month, I just made my software engineering salary. And I was like, this is getting pretty real here. So, talking through it with Kim and like the way I wanted to have my goals was I decided to just say no to that offer. I wasn't totally comfortable at that point, going full-time trading. Obviously I had the privilege of like my risk to do that was low. So I ended up taking a different job, just basically like writing blog posts and that stuff on the side. And it was like a huge pay cut from that software engineering, but it gave me the flexibility to be like, okay, my bills every month are paid. I have some money coming in. I don't have to, it wasn't like a 9 to 5. It was more like a freelance position. So I could set my own hours. And I did that for the remainder of 2020 into started 2021. And I think that peace of mind too. Everyone makes that like, we want to jump full-time trading. Of course, like that's an incredible goal. But you've got to give yourself enough like runway to really make that happen. And, especially when people are starting out, you think you can do it pretty quickly, but there is a runway. And in my experience watching other people do it, you have to, have checkpoints and set it up properly, have a decent nest egg and long time consistency before you can really make that jump. But then obviously once you have that, like we've seen traders have decades long careers and are incredibly successful.
If you're looking for ways to take your trading to the next level, Investors Underground might be able to help. You'll have access to courses and mentors to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms, where you'll find a vibrant community of focused traders who share their trade ideas in real time each day. Members also have access to the morning broadcasts, where members of the IU community share their trade ideas for the day ahead during the pre-market session. Members have access to the midday study sessions with Stan, the midweek study sessions with Sam, webinars, moderator watch lists, and all the other resources that Investors Underground has to offer. Listeners of The Trader's Journey can access exclusive membership deals available at investorsunderground.com/journey. And now, back to our episode with Matthew Monaco. That's great advice, and I like the idea of you taking a position that's sort of market adjacent, right? Where you're still working in a market-related field, and you're not having to switch gears so far between software engineering, which may or may not be related to stocks, and then going back to trading. So just something for those out there listening who might be in a similar position as you were back then to consider.
Yeah. And it was a big risk. I was very, very nervous, making that decision to do so. Cause, I had pretty much a traditional upbringing. You go to high school, college, you get a job. That was kind of like what was known and expected. And like breaking that mold in my head of like, I always wanted obviously to be a full-time trader, but breaking that mold of like, no, don't get that job. Like give yourself an opportunity to see if you can succeed. It was tough. It was scary. Definitely scary at the time.
Yeah. And was it something that your general family and friends were supportive of, go for it, you're young kind of thing? Or was it something where you had to explain to them, like it's not necessarily gambling, what was all of that like? Because different people I've noticed have, varying perspectives and experiences and on how their family responded to them trading or wanting to.
I will say my parents specifically definitely were nervous, but they've always been super supportive too. I think they always kind of knew I had like a entrepreneurial mindset and would try things on the side. I was definitely like through high school and college, like a side hustler. And I was trying to, make some money on the side, primarily in the college years to like put it in my trading account so I could get above PDT. And that was, a long grind to do so. So they were supportive, friends and stuff too. Like they definitely think you're a little crazy. And it's always interesting. I went to a wedding like 2 or 3 months ago of one of my friends from college, and it was all a bunch of college people, and trying to explain to people still to this day of like, what do you do? And they're like, I have a PhD, I'm a blah, blah, blah. I'm a level 6 engineer. And I'm like, that's wonderful. Like, good for you. I like trade stocks. And then they're like, what do you mean? And then that ends up being quite a conversation usually.
Yeah, absolutely. Those are always very interesting conversations to have with people. Matthew, I wanted to talk a little bit about your trading style. So, as of October, when we're recording this, 2024, how would you describe your trading style and where you find edge in the markets trading?
Yeah, it's definitely gone over a pretty dramatic change, I'd say, this year. And it's been work in progress, but I think this year a lot of things started clicking for me again. Originally, my growth stage, how I grew my account, was to the long side. And, I think with a small account, there's definitely a lot of opportunities on the longs because obviously there's unlimited profit potential on those. And when breakouts are working really well, they go crazy. We're going into a hot time, and I'm still more than comfortable longing. It's just once COVID ended, those breakouts got less explosive. They stopped working as much, and they still happen. I will still take breakout trades that are really explosive. It's just instead of happening, say, 2 or 3 times a day, they might happen like once or twice a week, right? So the opportunities are still there. So almost out of necessity, adapt or die. I jumped over primarily to the short selling side on these small cap stocks. And with small caps, as everyone knows, and a lot of people have said on this podcast, like the edge is to the short side. And I definitely agree. It's been a learning process. There's slightly different mindsets, I think I had on the long side versus how you need to approach a short. And when a long sets up, most of the time it's because it's a horrible short. And I think it's really helped round out my trading this year. I definitely feel a lot more confident, like when I show up every day, that there's going to be a trader. There's going to be an opportunity. I just kind of have to wait for it and see it versus like last year, for example, you'd sit there and some days you like, there's nothing. Like there's nothing to trade. And that's because my personal playbook I wasn't deep enough. And I think that's something that we always need to work on, especially during slow times of, let's expand this. And I'm still in the small cap world, but, in the future, next couple of years, like I think the next step is large caps. It's that same progression that I think a lot of traders go through in their entire career.
Have there been certain lessons or tendencies that you learned the way small cap stocks or even OTC stocks move and behave that you've been able to transfer to trading, some of the small cap or listed stocks?
Yeah, so OTC is definitely its own beast. Now, OTCs over the last 2 or 3 years have been pretty much dead, non-existent. I'd love nothing more for them to come back. In my opinion, they're definitely like the easiest to trade. And that's just because the market works fundamentally differently. They trade slower. You can basically trade an OTC stock just off the level 2. And if you're really good at reading level 2, well, you can pick tops and bottoms super easily because the turns are so much slower in that market. And like I said, the OTC breakouts, which worked really well throughout the COVID years, like they would be explosive. They wouldn't be 100% breakouts. They might be like 400 or 500% breakouts. And you're just trying to hold on for as much of that trade as you possibly can. In terms of the listed stocks, it's definitely a different, world. And primarily on the short side too. When I'm a long trader, I'm used to, buying breakouts usually for me, and I buy that strength. And then I'll add to that winner aggressively over time if it continues to run. On the short side, shorting weakness usually is not always the best thing, at least in the small cap world. And it's more of you have to play off these higher time frame resistance levels. And it's that mindset shift, the time frame shift that I've had from when I was primarily a long to primarily a short now these days.
And for those who are primarily still, bullish and trading to the long side, but eventually want to start shorting stocks, is there any advice that you would give to them? Because you've sort of ran that course and you've been there before.
In the small cap world, when stocks spike up, we've all seen this. You wake up in the morning, there's 10 stocks on your scanner, and by the end of the day, 9 of them are going to fail. They're going to go down and be in a downtrend. And that is your edge as a short seller, is that over time, these small cap companies, they're crappy, they have dilution, and you can obviously stack the edge in your favor if you have dilution, if, it's a former runner that's failed several times before, and you can stack the odds so that way your win rate's higher and better. But the point is, most of these companies fail. So for me, the biggest learning curve was learning how to size into these trades correctly. Waiting primarily, for that backside to really kick in before you have any meaningful or full size. Because that front side, the market's still hot. There's still plenty of runners right now. There's a lot of big spikers. And if you get too aggressive too early on the short on that front side, you're going to take painful losses and you're just going to do it over and over again. And especially when we get a lot of runners, a lot of people are like, oh, it's so good for the bulls. No, it's awesome for the bears too, because the more runners there are, usually the backsides are so much bigger. There's so much more opportunity. So, when we get all those runners too, it's really just a patience game and just let the trade play out and capture that backside. On a day-to-day basis, it's slightly different because you don't know necessarily if stocks are going to run. So, my approach usually is size in just slowly, with a wide risk at start, and then, let that first 30 minutes or hour play out and wait for the trend to develop. If the trend is clearly breaking down, is clearly fading, adjust your stop and, trend is your friend. Let it ride as far as you possibly can. One of the biggest indicators for me that kind of gives me an idea of like, is this trade going to work or not, is volume. We just had one yesterday. again, this is the end of October, but it's GLYC, traded over 1 billion shares yesterday, which was crazy. And I'm kind of shocked, honestly, it didn't run further to the upside. But after, the first hour of the day, when you're looking at it and you're like, it's already traded like 400, 500 million shares, like this is just a lot of volume. And small cap stocks inherently don't usually have that much volume. So it's one of those red flags for me where it's like, maybe we should get out of this trade or start planning for an exit plan, instead of, let's just hold this all day and hope we catch an all day fader.
How important is stock selection for you in deciding what you're going to focus on, especially when the market is a little bit hot? There might be 2 or 3 runners at any given time. So do you have any tips or advice to listeners in trying to think about where they might want to place their focus?
Yeah, I think stock selection is really everything. Me and Bryce too, we talk a lot every day and we try to figure out the stock selection because usually, again, the market's been fairly hot recently, but it seems like every day there's a great trade. It's just, did you pick the right trade? Did you select the right stock? Cause it's pretty easy to pick the wrong stock. So you got to make sure you're definitely selecting stocks right. So to answer your question, definitely very important. Obviously, for me, I always try to avoid that hot stock of the day. Now in the beginning of the day, you don't always know if it's the hot stock of the day, but after about 30 minutes or an hour, if it's that hot stock of the day, again, trading a lot of volume, it's the one everybody's talking about. It's the one everyone's saying, why isn't this breaking down? Well, it's probably going to run. Okay. Like it's the hot stock of the day. It's very, very crowded. And if you see yourself in those situations, well, I mean, those are the ones again that get crowded and end up squeezing people out. A lot of times the best faders are just the ones that people forget about. And we see it time and time again too. I've had a lot of success this month specifically with like day one gap and crappers. But we'll see stocks where people forget about them. I think Duo was the start of this month, DUO. And again, that front side was brutal. It was tough. And then all of a sudden 3-4 days go by, they do an offering or two, everyone forgets about it. And then it puts in a massive, 50% fade. So, avoiding that hot stock of the day is definitely super important. Other things I do that definitely help me save myself some headaches are, those mega low floats, the sub 1 million float stocks. I'll still trade them, but I'll go in and be like, look, if there's any red flags here, I'm just getting out of this thing. Cause it's just not worth the headache. It's not worth the pain. I find Amex stocks just trade weird and trade sketchy too. Again, similar notes where I'll still trade them if, there's a big gap on them. Maybe they have some dilution. It meets all the criteria that I'm looking for. But if there's any fishiness going on, those are the ones that typically just aren't worth the headache there.
Yeah, that's great advice. And related to small cap trading, I wanted to talk a little bit about risk because sort of inherently the more volatile stocks, and that tends to fall and include some of the small caps or the pennies, there's so much volatility either to the upside where you could get caught in a circuit halt or to the downside where maybe there's a, suspended trading and traders are not able to safely exit their position. Do you have any particular rules or things that you do to help prevent you, from getting stuck in some of those situations when you're trading the small cap stocks?
One of the big ones I have just right off the bat is there's all these, Chinese pump and dumps, that yes, there is definitely an edge there. But the risk, too, is extremely high. So for the most part, I just don't touch them. I've seen pain. I've seen traders lose a lot of money doing those. And when I see someone else do it, I'm like, I don't want that to be me, So I tend to avoid those. I don't think I've ever traded them well anyways. So usually, if there's signs going into it, like, hey, this is a really sketchy stock, based on either how it's trading, or again, if you're in any trading community, someone's probably picking up on it. It's okay to avoid that. Just don't trade that stock. And then in terms of just generally managing risk there, usually I think there's enough liquidity in most stocks that I trade where there's always a little slippage. But again, I've avoided those usually sub 1 million floats where you get those scary halt up, and you can't get out of those. Those ones, if I do trade, I'll definitely make sure either I'm stopping out before everyone else, because it's usually pretty obvious where everyone's stopping out. Everyone's using high a day as risk. Everyone, is putting a hard stop at high a day. So, at that point, maybe I just get out before everyone else, or I'm using small enough size where maybe I'll get stuck in the halt, but I'll be able to get out pretty quickly. Those scary situations are real, but they're only scary if you put yourself in that situation. If it's a 20 million float stock, which is still fairly small, right, in the grand scheme of things, it's not going to be that scary halt up, halt up, halt up. There might be a halt or something to the upside, but it's very rare you get that swipe up, swipe up, swipe up scenarios. So, again, stock selection, I guess, is the answer there. Goes back to that can protect you from probably 90% of your problems right off the bat. And then the rest of it really comes down to you, as a person, as a trader. So me, one of the things I do to protect myself is I have a position max stop loss rather than just an overall account max stop loss. So I'll set that at my usually it's a 2 loss, so a 2R level. So I'll take 2 stabs at it. If I lose on both of them, then my broker will just say, hey, your max stopped out. And then at that point, I'm usually just wrong, right? So I guess stock selection again here. I'm usually just wrong. I had the wrong thesis, wrong idea. If I lost on it twice in a row, I'm just wrong. We'll come back. And most times, not 90% of the time, the stock would just go higher by the end of the day if I'm shorting it, because it was just super bullish and I was just wrong on that. So it'll protect me really from myself there, because I'll be willing to try it twice. Maybe the first time I'm just too early and it happens. And that second time, after I've already stopped out once, I already have my red flags up. So I'm waiting for the backside. And if still it traps me, then I'm just wrong. So at that point, it's time to move on. That also protects me too, because, still to this day, like I said, my biggest mistake is historically, even over the last year or two, is maybe I'll have a big loss that, won't blow my account up, but it might ruin my month or ruin 2 or 3 weeks. And I've definitely seen with that position max stop in there, yes, I'll take a couple losses in there, but I'm not going to destroy a week. I might ruin a day, but I'm not going to, ruin a week or ruin a month worth of those trades.
Yeah, that's great for traders to keep in mind. When you do hit sort of your max stop, do you stop trading for the day? Does it depend? Do you take a walk? What does that all look like so that you can keep that stop currently what it is rather than compound it in a negative sort of way? Yeah. What does all that look like for you?
So since it's just a position max stop, it'll just stop that ticker for me, which is good. And obviously I could go if I wanted to and change that, but I try to honor that because again, I just know I'm just wrong at that point. So I try to let if I'm in other trades at that point, I try to let them, continue working or continue to let them run. Maybe, sometimes I guess if it's squeezing crazy, we have one of those, parabolic 1,000% runners in a day or something, I might cover some of my positions just in case there's some interest elsewhere that starts swiping some of these stocks, just to lock in maybe some profit if there is any. And then I'll definitely get off desk. My general routine is I try to be mostly done every day about 11 a.m. Eastern, 11:30 or so. When I say mostly done, my risk is off. Most of my size is off. Probably 78% of my positions are locked in or closed out. And if there's any trades that are working, I'll let that little small piece continue working, but I try to get off desk. You hear a lot of traders talk about it, and my story is no different. If you look at my stats from 11 to 1, I lose money. So I need to be away from my computer. Otherwise I'm going to go out there and ruin something. So, that's when I go on a walk. I try to go on a walk every day around 11. And then I'll go to the gym or have lunch, with the wife downstairs. And then I'll usually come back to my desk around 2, to see if I want to lock in any more positions or see if anything comes up. But usually the afternoon's pretty light for me. I usually don't add a lot of new positions. Most of my entering is done in the morning, unless there is a breakout. And sometimes that does happen. Most of my breakouts and long trades are afternoon trades rather than morning trades. Because as I mentioned earlier, most small caps fail. And if all of a sudden it's 2, 3 p.m. in the afternoon and it has not failed, well, there's something going on there, so pay attention to it. And then that's typically where we see the big breakouts happen.
Great. And you mentioned stats. So I wanted to ask about, how you organize your stats and if you have a routine, a process for going and analyzing whether it's, daily, weekly, monthly, what's working, what's not working, and then making those changes, so that you continue to keep, your profits high, reduce your risk moving forward.
Yeah. I use a tool called TraderView. I think it's a pretty popular tool. But basically every day I'll import my trades in there, and kind of on a daily basis, I'll do like a little like check-in, usually at night, of like, how'd the day go? Like, did you do something really stupid? Was it like just a textbook day? That sort of thing. I will do a pretty in-depth review pretty much every week at this point. On the weekend, either Saturday or Sunday, just whenever I have some free time. I'll go back, look at the week, and, see how my trading was going, but also kind of see what the market was doing too. For example, like the market goes in and out of waves with like all day faders. Sometimes they do fade all day, and I'll take a look and see how did they close out that week? How many stocks closed at the lows? How many stocks had end of day bounces? That sort of thing, to try to get a gauge of what was going on. And I think Brian Lee said this on our panel at Traders for a Cause too. But the reality is the small cap world's small enough where we're kind of all trading against ourselves, especially because everyone knows the edge is on the short side for the most part. So, it's kind of like, what is everyone else thinking? That's usually the question I ask myself on the weekends is, is everyone expecting these to fade all day going into next week because it did it every single day this week? Well, then maybe I might want to cover like an hour before close. Again, just trying to be ahead of everyone else, because if everyone's going to cover at the end of the day, you're going to get those end of the day bounces or the end of the day swipe ups. And I don't want to be a part of that. And then the other thing I do too, I'm a pretty visual person. I've never been, some people will hit you with stats where it's like, if I risk, 20% above highs, I'm going to win 72% of the time. I've never been a stat guy. I've always been more of a visual person, and I'm laughing because I have like 100 of them here on my desk, but I've got like hundreds of charts of my trades here, and I grade them like a school teacher. And I'll go through it like pen and paper and be like, this was a horrible ad, or like, what were you doing? Like, you used the wrong risk level too. I do that for my big losses, but also every day I keep like a running list of what I just call the best trades. And usually every week, again, I'll print them out. I go through way too much ink, but, I'll print them out and I'll look at the best trades too, because like those are the trades, either I traded them or didn't. And like what made them good. So then I can kind of see over and over of like, this is what a good trade looks like. This is what a good trade looks like. And I still do that because if I'm in a trade and it's not doing what I expect, well, it's probably not a good trade. A lot of the times the best trades just work. And you hear a lot of traders say that over and over again. If you find yourself fighting a trade, it's probably not working. Like, maybe come back and reevaluate, because, small cap gap and craps, they're just going to crap. They're going to die. They're going to fade off pretty quickly. And if they're not, then you're wrong. And that's okay. That's where the losses come in. You have to learn how to accept the little losses when you're wrong, so then that way the winners can actually run.
I love that you understand how you learn and what works best for you. You're actually printing out. You got the printer running over there at your house. That's incredible. And I think it goes to show that you have to understand when you're trading and you want to do this at a high level, what works for you, and to lean into that so that you can continue to have success, whatever that might look like for the individual trader. Matt, I wanted to talk a little bit about keeping your profits. Is there anything that you do, whether it's wiring out or, having certain parameters for when you'll stop trading at a loss? Anything that you do to help keep your winners much larger than your losses? What does that all look like for you?
Yeah, I am a religious wire outer. I wire out. If I have a profitable day, I'll wire out every day. It doesn't matter. And it's nice when you get 5 wires every week into your bank account, right? There's a couple of reasons for that. In the small cap world, you brought up that the risk, there's definitely substantial risk there. And as a result, like, truth is, the style I trade, I really don't want to have a huge amount of money in my trading account anyways. So kind of the level for me, and I'm sure it's different for everyone else, and that's fine. It's grown obviously over the years, but I'll keep it like $100,000 in my trading account right now. And that's the level I like. I can trade the size I want. You'd be surprised. You can have very, very profitable days with that much money in your account. And also on that point too, like obviously it caps my risk, but every day when I have those profits, I'll just wire it out into my account and it feels like a paycheck, just day in, day out. And that's a process I've had since the beginning. And, some of it is like, I think in the beginning, at this point it's a habit, but in the beginning I didn't really trust myself. I thought I was going to blow up. And I saw that happen to a lot of people and a lot of friends or people I met in communities where they get a real hot streak for like 3, 5, 6 months and they make a ton of money and then they lose it all in like the next 2 or 3 months because they didn't wire out anything. So I wanted to make sure that, I pulled that money out. Like that money's real. Because when you keep it in your account, depending who you are, kind of feels like a video game, right? You're detached from the money. And then all of a sudden you take it out of the account and you're like, oh no, this is real money. So that's a process I've done, since the beginning. Originally, when I just got above PDT, I kind of kept it around $30,000. And then over the years, obviously just inched it up. But I still do. And if I have a red day, that's fine. I don't put money in. I'll just say, I lost a little bit today. I'll go back. And, once I get over that threshold, then I'll just withdraw it back down. And it allows me to kind of reset every day too. That's my little different than most people I know. I'm not in the wealth. It's hard to explain because a lot of people want to grow their accounts as quickly as possible. But what I'm interested in is like, let's make this income real. Let's go put it out. And then for me, I'm going to go on a tangent here, but one of the first things that like I always thought that kept me in trading when I was having a tough time was, in 5 years, if I could figure this out, like how great would my life be? Or in 8 years, if I figure this out. So like some really far point in the future. And that's a mindset that I still have too, where I'm like, in 5 years from now, like I want to make sure like basically I don't have to trade at all unless I want to trade because on the side I'll have different investments, and et cetera, et cetera. And that's usually what I do when I withdraw that money is I'll put a little bit here, a little bit there, and then slowly build that nest egg. So then hopefully, right, that day does come where it's like, I don't have to trade if I don't want to because, the nest egg's built up. I build up a lot outside of trading versus keeping it all in my account. So that's my big approach.
Yeah, I think that's a really interesting approach that can have very tangible benefits for traders. I mean, for one thing, you're being able to compartmentalize the trading and the income side of it. But it also sounds like, and correct me if I'm wrong, but it helps keep your mindset at a certain point, right? It helps you realize that you don't necessarily have to go trade and make the money and grow this account, and it's constantly always just one bad trade away. You're making that money real and sending it elsewhere so that you can keep the trading as trading and then keep your extra, outside of trading ventures and your accounts growing as well. So you're, being able to separate the two, which I think can be really useful for people. I really like this idea, and I think it's something that people might want to at least think about.
Yeah. And, in the grand scheme of things, I think I'm still, I've been doing this 7 going on 8 years, but it still feels like I'm a baby trader. I've been successful through the last 5. But for me, like the point is, I feel like I have a lot to learn. For me, though, I like every day to feel like just a normal day, like it's routine. When I get overhyped, like, oh my gosh, this is the trade of the year, right? Or something like that, I will find a way to mess it up. I know I will. I do it every time. I'll get too aggressive or I'll be a little too selective on the entry and I'll miss it because I put so much pressure on that trade. Versus instead, if it's just like a routine for me, I'm like, oh, here's a good setup. Here's another good setup. And like day in and day out, again, the small cap market's been hot enough the last couple of months where every day there is a trade. So I just want to show up every day, do my routine, find that good trade, execute it, win, lose, whatever, wire out the money if it's real, and try to set myself up, so that way maybe one day when I'm a little more comfortable, right? Then you can go out there and you can be someone like Lance who goes and, saves the Japanese stock market or whatever he did.
Yeah, absolutely. I mean, if you have that money set aside elsewhere, then it's a lot easier to have it available for when you need it and need to deploy it for a risk situation.
Yeah.
I think it makes a ton of sense. I don't think anybody really to explain it in this way. And so I think that's extremely beneficial for the audience. And I'm sure there's other people that do it, just haven't explained it to the degree that you have. And I really appreciate that.
I think over time too, because I get a lot of questions. Like sometimes I'll have big days and I'll like do a webinar or like talk to someone and explain it. And they're like, how's it possible for you to, make 50 or 100% on your account in like one day? And obviously like Centerpoint and any broker has leverage and stuff. But for me, some people, when they're trying to grow their accounts, and I don't disagree with it, they'll be like, I want to risk 2% of my, account or whatever. So that way they can continue to size up. And for me, it's just a fixed dollar amount risk. Like on this setup, if I'm risking high a day, like this is how much money I'm losing, period. And when you do that correctly, like I don't calculate how many, I calculate how many shares I buy, but it's not a position size or any of those things. It's when I'm wrong, like this is how much money I lose, period. And then obviously when it works, like all of a sudden you look back and you're like, oh, this was a 5 or 6 or 7 hour trade. And there you go. Your account grew pretty quickly, at which point I'll just wire it out and just show up the next day and try to do the same thing again.
Yeah, absolutely. I think it makes a ton of sense. And one other topic that I wanted to just quickly touch on is networking, having other traders that you can bounce ideas off or talk to them, whether you're on a high and you have a lot of profit or you're going through a drawdown or some tough times. Can you talk a little bit about the importance of having that network and how you've been able to, lean on some of the great traders that you mentioned earlier to be inspired or to help you get through things?
I'd say networking is everything. I'd say it's one of the main keys to my success, I think, is the networking. Obviously, we talked about that podcast. That was kind of like what opened some doors for me in the beginning. So I met Jack and Kyle and all of them pretty early, Huddy, when they were obviously more successful than me, but they weren't like light years ahead of me at that point. So I think networking, if you can get your foot in the door anywhere, whether, you're in a chat room or you see someone on Twitter, just start talking to them. And it's a super added bonus too. Like if they're roughly around the same level you are as a trader, roughly around the same profitability, have the same goals, like, that's when you start to see a lot of people push each other, and you start to see results a lot faster. And obviously being with Bryce, we were roommates. Then we both moved to Austin together. We traded together every day for like 5 years. So like we were pushing each other, and that made Bryce, size up and take some bigger trades and have some success, and me too. And I think that's something that like you just don't have, like, if you're out there alone, and you might miss something is the reality. Like, you're only human. You only have 2 eyes. There's a chance that you just miss a trade, or you're approaching a setup wrong, or like you're just looking at it with the wrong lens. And having that feedback or someone to be like, no, this is the way I see it. And then you can have a conversation around that is, really good. So networking, huge plus. If you have to do it, I think, really to succeed.
Do you have any advice for those listening who would like to network but are either shy or don't know how to get started? What would you tell them?
Probably maybe the easiest way to get started would be just, start being active. I think that's kind of what like attracts people to you. And you don't have to be, flashy or anything like that, but like be active on Twitter, put some ideas out there, or like share your trades. Do a trade review, any of those things. Or if you're in a chat room or a community, like, start talking in there. You don't even have to post ideas if you're too nervous to post ideas. Just start being active in there. And I think, first of all, that'll attract people to you. They might reach out to you. They might ask you. And that's what I did. Ultimately, I'll go back to that podcast, but like, yes, I provided value to the community. People could listen to those interviews and stuff, but like selfishly, it was definitely for me. I wanted to talk to those traders. I wanted to see their mindsets. That'd be my first step if I had to do it over again. And then secondarily, it'd be go to some event. I know a lot of brokers, like for example, I think next week Cobra is doing a meetup here in Austin, and they're hosting it, and there's going to be probably like 50 to 100 traders. Like try to go there and just talk to people. Even if you don't know anyone, show up, and maybe after you do that a couple times, you'll meet somebody. Or we just went to Traders for a Cause, and that was a super cool event. A couple hundred people there, all traders, got to hang out in Las Vegas and just have a good time, but also talk about trading. There's some events out there. So definitely just like keep an eye out for them and put yourself out there. I talked about the podcast and Kyle and Jack a lot too, but I think a big turning point for me was the 2019, I went to Tim Sykes' conference. And I sat in this, the crowd and watched everyone talk. And that was my first trading conference too. And again, a lot of the people I met there, still friends to this day, was super inspiring. And got to interact with all those guys. So network any way you can.
Thank you. That's incredible advice and fully agree. Matthew, I'd love to go through a lightning round set of questions, pretty quick questions and pretty quick answers. Is that okay?
Yeah, let's do it.
Awesome. My first question is, what do you consider to be your greatest strength as a trader?
My greatest strength, I think, is I'll add aggressively. I have no problem at all getting really, really aggressive on a trade, especially when it's working, I'm adding to a winner and it's in my favor. That said, if I get too aggressive, this is where you have the whole win rate versus risk reward conversation where I'll add so aggressively, it definitely will damage my win rate. But when those winners work, and I do it correctly, obviously the winner will be much, much larger. And that's how you get in those scenarios too, where you'll see 10, 15, 20 R trades. And it's just because you kept adding to that winner, over and over again.
What's the best piece of trading advice you've ever been given or heard?
Yeah, I'll give Huddy credit for this one. I don't know if he actually came up with the quote or not, but it's in order to be a consistent winner, you have to learn to be a consistent loser. And just to explain that more, right? You got to have those stable, consistent losses. If you want to risk $100 on every trade, then every loss should be $100. You shouldn't have $1,000 loser thrown in the mix. You have to have the stable, consistent losses.
Are there any specific indicators that you use on your charts in order to help you get in or help you get out of a trade?
No, not for entries or exits. I do a VWAP on my chart, pretty common. I use it as a guide. I like to see where stocks open the day. If they open under VWAP, right? I'm a little more cautious because I feel like they're going to trap people, swipe it up through VWAP. And that's usually where I'm waiting for an entry price on some type of bounce like that. Versus if they're over VWAP, I'm more inclined to take my initial starter entry and kind of let the trade play out. But I don't have any, really, I'm just at the end of the day, support and resistance and kind of just reading the tape and price action is what will determine my entries and exits.
Are there any areas of your trading that you're still working to improve on in 2024?
Expanding that playbook would be the theme for this year. So short selling was the big theme for me and the goal to work on. And I've got, day one, kind of, again, what we call gap and craps. I've got those down pretty pat too. When we get big multi-day runners, and I think part of the problem is those are less frequent. But what people like to call like a first red day or that, that top blow off day. That's a strategy that I've never been super successful with. On paper, I get it. It's logical, makes simple. So I think expanding out to that, and adding that one to my arsenal would be pretty beneficial.
If you could give one piece of trading advice to all new traders, what would it be?
A mix of take your time and size down. A lot of traders, again, they want to go out there and they want to get rich in 6 months or a year. And can people do it? Sure. I've seen people do it, but the reality is it's a journey. It's going to take some time. And once you learn how to be a trader, once you have that skill, and if you give yourself some room to learn correctly, it's something that you can do for the rest of your life. I mean, we've seen traders, again, trade for 10, 20, 30, 40 years and just continue to have success. And I don't think the market's going anywhere. So, if you just give yourself a little bit of time, right? If you have a full-time job, give yourself a year or two and try to learn on the side and just make sure you're consistent with it. That's the hard part with that advice is you have to stay consistent with it, but don't go out there and, don't try to make $1 million in a day. No one becomes a millionaire. Just very few become millionaires. It's a lottery if you're trying to do that versus the steady, consistent path.
For the trader who's currently struggling and or considering quitting, what advice would you give to them? What would you say?
I went through a phase probably around 2018 or so after about a year and a half where you're frustrated. And I'd be lying if the thought doesn't cross your mind where you're maybe I should give this up. At that point, obviously you're down bad a little bit. So I'd say the first thing to do is probably just give it a little time. Maybe it's a week or maybe it's a month. Yes, it might suck, especially if you're used to being there every day. But again, the truth is in a year or 2 years, there's still going to be trades. So you don't have to, do it immediately. So maybe give yourself some time to reset a little bit. And after that month, if you're like looking around and you're like, man, these traders are having success, I want to keep doing this, you feel motivated, come in, you're reset, you're refreshed, go out there and, maybe try, like a different community or a different strategy. Cause clearly what you were doing was not working. So I wouldn't say keep doing that. So that'd be the first thing to do, for sure there. And, again, I'm a big emphasis on size down, over and over again. I'm actually right now, my younger brother, he's a senior in college and he's kind of going through the same thing I did. And I'm trying to teach him how to trade too. And he was kind of frustrated because he had like 2 or 3 or 4, he was down basically for like 2 or 3 weeks in a row. He just had red weeks. And I was like, yeah, but like, he's trading with a small $5,000 account. So his losses are like $50 or whatever here or there as he's learning. And then, last week on Fun, PHUN, he had like a $400 winner on that big first red day. And it put him like green on the entire month. And I was like, yes, exactly. Cause, that is trading right there. He was making some other mistakes, which was leading to the losses. But I was like, you had a huge winner on this trade because it worked. The stars aligned. You traded it correctly. And, that's what it's all about, is going out there and taking it slow and steady. Don't beat yourself up. I'll get frustrated if I have a red month. Of course, we're all human. We get frustrated, but you got to go in with that clean mindset. Because if you have any baggage that you're bringing with you, it's just going to keep dragging you down.
What advice would you give to traders who are doing very well in 2024?
Yeah, wire out. Take some profits off the table for sure. Now, granted, yes, you can go out there and you can keep growing your account too. But when I had my big year, 2021 was my biggest year. I had a really good week in February and I basically took all those profits and I put them in a bunch of different investments too and basically locked it all up. And honestly, I pretended like that money didn't even exist and it still does exist. It's out there. It's growing. It's locked up. Because again, my plan was I want to build that nest egg and set it up for the future. So the reality is it's not real until you wire it out. So I'd say wire it out. That'd be my advice.
Great advice. And Matt, last question. For those listening and watching who would love to learn more about you, how you trade, or maybe even contact you, how can they do so?
Yeah. If you go to my Twitter, which is Mono, MONO _trader, make sure it's me. I know there's a lot of scammers out there on Twitter. So, that's where I post a lot of good stuff. Also on Stocks Trade's YouTube channel, I've done probably 100 videos, I would say, or so. So if you go over there and obviously they are, a year or two old, but the lessons in them are definitely really good too. That's a good spot to be. And yeah, go on Twitter. I go on Twitter every day. I might not post, but I'm definitely on there lurking and, looking at what other people are posting.
Incredible, and highly recommend everybody go listen to the content that Matthew has put out and also Beyond the PDT with you and Bryce Toohey. So Matt, thank you so much for being here. I really appreciate it. And I know that the audience will as well. So thank you so much.
Yeah, absolutely. Thanks for having me.
We hope you enjoyed this episode of The Trader's Journey. We have additional episodes we believe you might also like. So don't forget to subscribe. You'll be notified of upcoming episodes the moment they're published. Thanks for tuning in.